How's it going, everyone? Welcome to the welcome to the sweep. We're gonna get started here in about 10 seconds. As you guys get logged in, feel free to say hello, chat that in. If you have any questions, of course, during the session, feel free to chat those in as well, and we'll get to them at some point within the session. All right, let's go ahead and get started, guys. Appreciate you being here. As always, like, share, and follow on social media. Facebook.com/DayTradeSmart, Instagram.com/DayTradeSmart and the number 1, YouTube.com/The Proving Ground. So if you have not hit that subscribe button, hit that subscribe button so that you'll get notifications whenever we post new content, and of course when we're doing the sweep on Fridays. And then if you have any questions beyond that, of course, you can always just send us an email to info@daytradesmart.com. All right, guys. So today we're going to start with is a weekly setup, and we'll do these every week. So I'm going to start with a setup because I want to be able to tie it into whatever it is that we're learning as well. And of course, we're going to stick with Forex. So our weekly setup for this week, for today, is going to be on the euro versus US dollar on a 5-minute and 1-minute time frame. So we're going to be using a 5-minute chart and a 1-minute chart, and I'm going to show you the setup here in a moment. The risk reward we're going to be using is a 6-pip stop loss and a 3-pip take profit, which is a 2-to-1 risk reward. You can see our stop loss, the number we're risking for, is twice the size of our take profit. And obviously, the only way that this would be profitable is if we win this trade 70% of the time or better. Otherwise, it would not be profitable. And we win this one about 80% plus, just depending on the approach and how how much practice you've had with it, how dedicated you are to executing when you're supposed to, and so on and so forth. So win percentage 80%, and because of that, we'll be using a 2% risk. And now we could justify using a higher than 2% risk on this particular trade, maybe even a 3%. But the reason why we've allocated for 2% is just because this is one that you may end up in multiple trades at the same time. So in other words, you just entered a trade, and then another setup comes available before you exit that trade, whether it's by stop loss or take profit. So we'd never want to exceed 5% risk. And so if we start with 2%, knowing that there are instances where we may very well be in 2 of these trades, then 2% 2 times is going to be 4%. So it would be a 4% risk. If both of those trades lost, we would lose 4% of our account. Right? So we don't ever want to be beyond 5%, which is why we're only going to use 2% risk, because we know that we could be in multiple of these at the same time. Our time of day that we would be trading this is going to be between 8 a.m. and 10 a.m. Mountain Standard Time, or 10 a.m. and 12 p.m. Eastern Time. So you guys can do the math there, offset from wherever you are from Eastern. And this is the only reason that we're able to give you win percentage, risk reward, is because we're referencing a specific currency pair, a specific setup with specific parameters back-tested between these time frames. So basically the work's been done for you, right? And so the time of day here will be between 8 a.m. and 10 a.m. Now, that's Mountain Standard Time, and I'm going to show you what that looks like on our charts. And then our indicators that we'll be using are going to be the TNT, the major minor indicator, pressure indicator, and clean pressure chart. And so I'll show those to you guys as well. Then after we do that, I will talk about the trading checklist, and I'm going to tie it into that. Okay, so let's look at our setup. So here's the Euro USD, and this is from this morning. And I want to show you guys a cool tool that I like to use. So if I go to worldtimebuddy.com, I can put in my time zone, which is Mountain Standard, right? Which right now it's 3:03 or 15:03. And I can put in UTC, Coordinated Universal Time, which is what the Forex market runs on. So if I want to see what time it would be if I want to trade at, say, 7 a.m. or 8 a.m., like we were saying, 8 a.m. Mountain Standard Time, what time would that be on my chart? And that would be 1400, which means the first setup that I could potentially get would be the last 5 minutes of the 1300 candle. In other words, at 1355, because I would be entering the trade at 1400, and then all the way until the end of 1500, right? Which would be 5 minutes before 1600, or that candle that shows that it starts 5 minutes before the 1600 hour or the 10 o'clock hour for me. Right, so let me show you what that looks like here on the charts. Down here at the bottom, you can see that this started at 1355, and that's when this candle started, was 1355. That means it ends at 1400, right? So I would be entering my trade at 1400, or my time, 8 o'clock Mountain Standard Time. And at this point, I don't see the setup, so let's wait till we find the setup. But essentially what we're going to be looking for is potential of 4 points here, potential of 2, we'll say 2, because you could do 2 to 4 points, but I'm going to keep this simple, so we're just going to say 2 points here, 3 points here, and I'm going to break down what those points look like, and 4 points on this chart. So this is a 5-minute chart. You can see today's date, 5/7/1355, in 2021, right? And so let's break down what these points would be. 4 points, if I was looking for a buy on the TNTs, would be, if I got all 4 points, then the oranges would both be pointed up, thick orange and thin orange. And then the blues would both be pointed down. So blues and oranges, blues are inverse, meaning when they're down, the basic indication, there's some more advanced stuff that we won't talk about, but when it's the basic indication, when the blues are pointed down, that's signifying the opposite direction. That's signifying up. And when oranges are pointing up, that signifies up. So these are directional, these are inverse. And the reason why we did that is because if they were all directional, then sometimes these lines would lay on top of each other. You wouldn't be able to see each individual line. So we made 2 of them inverse and 2 directional. So if we're looking for a buy, then we want oranges up and blues down, right? So if you're looking for a buy and it's sideways, then it does not count in your favor. If you're looking for a sell and it's sideways, it does not count in your favor. And that's for any of these lines, okay? All right, so 4 potential points there. And then 2 potential points here. If we're buying, we want majors pointed up and minors pointed up. If we're selling, we want majors pointed down and minors pointed down. So that would be 1 point for majors, 1 point for minors. Pressure, we want pressure green pointed up, that's 1 point. Red pointed up, that's 2 points. And green on top, that's 3 points. And that would be for a buy. If it was down, we'd want red pointed down, green pointed down, and green on bottom. And that would be 3 points. And finally, in the clean pressure chart, we want the same as the pressure. So we want the green line pointed up would be for a buy. Red pointed up would be another point for the buy. Green on top would be another point for the buy. And then the candlestick itself being above these lines, like it is here and here, right? That would be our 4th point. Now, for a sell, we'd want green on bottom and pointed down, red on top pointed down, and the candlestick being below those lines, right? So green on bottom is 1 point, green pointed down is 2 points, red pointed down is 3 points, candlestick is your 4th point, okay? So obviously, if this is your first time hearing about this setup, it sounds difficult and confusing, but it's actually really simple. All it takes is a little bit of practice, right? So let's look at just kind of what we did today. Now, when we count these out versus counting how many we have in our favor, we're going to count how many we have against us. And if we have 4 or more, okay, equal to or greater than, right, 4 points against us, we are not going to take the trade. Okay, so if we have 4 or more points against us, we're not going to take that trade. So let's look at it in both directions here. Let's say we wanted to see if we could get a buy. Well, orange is down, so that's 1 point against. Blue dotted is sideways, 2 points against. Thick blue is up, which is inverse, right? If we're looking for a buy, so that's 3 point against. Minors are down, so already that's 4 points. We can continue to count, but we already hit 4, so we wouldn't take a buy there. Would we take a sell? Well, we have 1 point against the sell right there, 2 points against the sell. We've got 3 points against the sell, 4, 5, and 6, so no trade there, neither for buy nor sell, right? We have too many points against us. So let's go to the next. Right here we've got, if we're looking for a well, let's just skip forward so we have time. So this is, we don't have enough points here for either direction either, right? So, you know, if we're looking for a buy, 1 point against, 2, 3 points against, 4 points. So there it is. If we're looking for a sell, 1 point, 2 points, 3 points, 4, 5. So no buy or sell there. Here we get our first, and this is at the end of 14:05. So, you know, 14:05 in a couple seconds, we would be entering a trade, and it would be a buy, because we have thick blue that's pointed up, which is 1 point against us, right? These are good. These are good. Greens on top, all 4 pointed up. Thick orange is up, thin orange is up, blue dotted is down. So thick blue is against us because it's up and it should be down, and so that's 1 point against. Green is on bottom, but they're pointed up and the candle is above here, so we have 2 points against. That's it. So right here, we would take a buy trade, right? And again, we're taking a stop loss of 6 and a take profit of 3, right? So we need to go 3 up before we go 6 down from this point. Next candle, we move up 6.8, which is more than enough. Let me erase that for a second. See, no, we didn't get any drawdown, so that was good, which was more than enough to get out of our 3 pip trade. It went twice as much, right? Now, if it went the other direction, 6 pips, if it went down 6 pips, we would have lost that trade. But it went up 6 pips, so we won the trade. All right, so here's another one. And right here, we're looking for another buy. And so we have 1 point against. We have 2 points against. Those are pointed up, so that's good. That's still on bottom. That's 3 points against. But they're both pointed up, and the candle is above. So we only have 3 points against. So right here, we take another buy. And that moves 3.7, so that's enough to get out with spread. Went about 2.5 against, but that would have filled. Right here, we don't have a setup because we don't have enough points. Feel free to pause the video and count those out. Neither do we here, nor here. Right here, we've got another one. We've got 1 point against with the thick blue, 2 points against because green's on bottom, but they're pointed up, so that's good, and 3 points against because green's on bottom, but they're both pointed up and the candle is above. So again, we only have 3 points against, and so we would be looking to take another buy trade right here. And that one moves against initially by about 4.6 pips. That would have been for the birds. 3.3 pips up. Let's go back and see which one went first. Did it go up first? So this is a 1 minute chart. So each of these is going to show 1 minute increments of what happened in the next 5 minutes, right? So first minute, it went up 3.3. That's enough to get out of the trade. So that's fine. We would have won that trade, and it wouldn't have drawn down on us but 2 micro pips. So that would have been fine. Okay, so let's move on. So right here, we would not have had another trade. Again, feel free to pause it if you want to count out the points. We have too many points against. If we're looking for a sell, we'd have too many points against us, right? All right, so just really quickly, I'll count them out for you. 1, 2, 3, 4, because red is sideways. So there's 4 points against. And we don't have enough for the buy either. We'd have too many points against there as well. Okay. So right here, again, not enough points. There, again, not enough points. There, not enough points. Not enough there. Right here, get another one with enough points. So how many points do we have against? Well, these are all in favor. Oranges are up, blues are down, so that's 4 points in favor, so nothing against. Now, we're looking for a buy right here, so majors and minors are pointed up. Those are in favor, so nothing against. Here, we have red sideways, so that's 1 point against, and green on bottom, so that's 2 points against. Now, green is pointed up, so that's good. So 2 points against, and then candles above, green is up, red is up, so we only have 2 points against our position right there. So we'll go ahead and take another buy or long trade. Let me erase that for a second. And right here, it did go short, 5.1. That would have sucked. It went up only about, 6 micro pips or so, so not enough to get out of the trade. We'd still be in that trade, right? So we're still in this trade right here. I'm just going to make this, let's just make it thicker. So let's say right there, we're still in that trade, and we'd be getting into another trade right here, right? Because we have no points against there, so that's all good. No points against there, that's good. 1 point against, 2 points against, and 3 points against. Green's on bottom. So we have 3 points against us, but not 4, right? So we'd be looking to take another buy. So we'd still be in a buy, right, for 2% risk, and then we'd take another buy for another 2% risk. So now we're at risk for 3.2. That's pretty close. Let's try to get beyond that. But that theoretically, in most cases, is going to be enough to get out of a 3-pip trade. Is 2 pips of spread. It did go down about 2.5. And by the way, we'd have another setup right here. But let's just assume that we're going to hold on to that for just another couple just to see if we can get more than 3.2 pips of spread or of movement. So right here we've got 1 point against, right? Because blue dotted is up and it should be down. And we've got 2 points against because green is on bottom, but now they're both pointed up. And 3 points against because green is on bottom, but everything else is there, right? They're pointed up, candlestick is above the line. So we still only have 3 points against there, so we take another buy right here. And with that, that'll be enough to get out of this trade, which is, so we still would have been in 2 trades. That's 4.9 pips now, right? And this one is only 2 pips, so we'd still be in this trade. Let me change that. We'd still be in this trade. That one right there, right? Because we went up 2 pips, but we came down 1.4, but we didn't go up enough to take profit. So we're still in this trade right here. And right here, we don't have enough points on this candle to take another trade, so we do nothing there. Let me just make sure. 1 point against, 2 points against, 3, 4, 5. Yeah, okay. So we have more than 4 points against for the buy, and we don't have enough points for the sell. Okay. Right here, that should have gotten us out of this trade. Yep, 6.5, so we're out of that trade. This one, another trade sets up. We have 1 point, 2 points against, 3 points against, because green's still on bottom right there. But you can see thick orange is flat, so that's 1 point against. Thick blue is up, which should be down. That's 2 points against the buy. Those are both up. That's good. Green is on top, and they're both pointed up, so that's good. Green's on bottom. They're pointed up, and the candle's above, so the green on bottom gives us our 3rd point against, but not 4, so we're good to take another buy right here. And right there, let's see how that goes. Let me erase that for a moment. We don't get much to the long side. It moves 4.8 against us, right? But it hasn't stopped us out. It hasn't moved 6 pips against us yet, right? So we'd still be in that trade, and then we'd take another trade right here, okay? And this one now on bottom, but they're both pointed up, so that's 2 and 3 points against, right? Because they're both pointed up, but green is on bottom, so we don't lose that 3rd point. So we got 3 points against. Green is on bottom. Those are both pointed down, and the candle is below. So we only had 3 points against on this one, right? So we took a sell, which means we are at risk of 2%, 4% total, right? So if we moved up 6 pips, that wouldn't take us out of this trade, but would stop us out on this trade. If we moved down 6 pips, that would get us out of this trade, but it would stop us out of this trade. So in one of these scenarios, one of these can lose and the other one can win. Another scenario, both of them can win, and in another scenario, both of them can lose. Right? So let's see how this goes. So right there, that moves. So we're in 2 trades, right? We're in this trade right here, and we're in this trade right here. So this trade, this short trade, is down 3.9. This long trade is down about 2 pips to that point, right? Right there, this trade is out, so that one won. That's profitable. And this trade probably lost, right? Yep, 9.8. So this trade is dashed instead of just a solid line to reflect that we lost that trade. Okay? And right here, let's go back for a second. We don't have enough points to take another trade. You can pause that and look at that if you'd like. Right here, we have another trade set up. We can see that we have 1 point against for the buy, 2 points because green's on bottom, but they're pointed up, and 3 points because green's on bottom, but they are pointed up, and the candle is above the lines. So we only have 3 points against us here. So we take a buy, and we're out of all of our other trades, so this would be a new trade. And that moves up 4.6, so that's enough to take profit. We're good there. And we don't have a setup right here, so we do nothing there. And no setup there, or there, or there, or there. And that brings us, actually this would have been the last candle, because that's 15.55. Right, so we would have stopped our trading at that point, and that would have put us to, at the end of this candle, would have put us at the 10 a.m. Mountain Standard Time, right? So altogether, let's look at this. Altogether, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, and 1 loser, right? So 8 trades, right, which is 24 pips, right? 8 times 3, 24 pips that won, and then 1 loser for 6, right? So that would be 17, or no, sorry. Oh my goodness, I can't do math. 20, 18 pips profit on the day, right? Okay. So good. It was a good trade day with some quick scalps. That was just one of the setups that we like to take just to track it, make sure that it's tracking well, and that one's doing well. Okay, so good. Now I'm going to tie this in for us because we're going to be looking at a trading checklist today, right? So we want to review on our trading checklist. What we want to talk about today is what we recommend having on that trading checklist. Okay, and what is a trading checklist, and how often should we do it, and all these different things, right? So we're going to look at those things today. All right, so imagine you're the pilot, okay? You're a pilot, whether you've been a pilot for years or this is, you've gone through all this training, you got all your flight hours, or you're still in training. The first thing that you do is work from a checklist, right? One thing pilots are known for is their staunch requirement to perform a pre-flight checklist. Whether you've been piloting aircraft for a day or a decade, they never skip this step, right? They never skip this step. So like pilots, successful day traders start their trading day with a checklist. This ensures a step is not missed and they are in the right mindset before placing a trade. Some traders will just work through a mental checklist rather than an actual document. This method is not recommended as results may vary, right? So one of the reasons why I like to work through a checklist is because early on, especially, I would get really excited, right? I would be watching the market and things would start moving, really fast. So I'd get all excited and giddy and I'd want to jump in on that movement, right? I haven't done any analysis. All I can see is the market's moving up or it's moving down, and I want to jump in on that action. So I would rush to get whatever it is that I needed done because I had basically already made up my mind, right? I'm going to buy or I'm going to sell, which is foolish. Don't do that because although sometimes it might work out for you, long term that's not going to prove to be profitable, right? And you're going to walk into something and let's say the market's moving up really aggressively and you buy, and what is your stop loss? What is your take profit, right? So let's say you just put in an arbitrary take profit. Let's just say 3 pips or 5 pips, or you're going to trail it or whatever. You're going to hope to get more. Let's just say you put in a 3 pip, but right at that moment it starts to go the other direction, right? Okay, what's your stop loss? Okay, and what if at that moment it moved back? It moved from where you entered, it moved the other direction, let's say 10 pips. Okay? So now you're 10 pips against your position. So you can't put a 6 pip stop loss in. You can't, now you have to put in either stop the trade out there or decide where your stop loss is going to be. Right? And so let's say that you decide, okay, well, it's probably still going to go up, so either I'm not going to use a stop loss or I'm going to set a 15 pip stop loss. Okay? And it hits that. Well, that's a 5-to-1 risk reward ratio, first of all. So that's pretty big. You'd have to hit that trade 90+% of the time in order for it to be successful. But let's say that you didn't put in the stop loss, or it moved more than 10 or 15 pips in that split second, because it can do that sometimes, right? And it starts going the opposite direction, right? You really start to find yourself in no man's land. And if you're really emotional about it at that point, which obviously you were to begin with because you put in a trade based on excitement and emotion, not anything logical, that can really eat you up, right? Because then you sit there and you hope that it's going to come back and it's going to start moving in your favor. And what if at that moment it really starts moving aggressively against you, right? You have no plan. You have no plan for that. And because you have no plan for that, it sometimes will just continue to eat you up, right? Or you end up taking a big fat loser that you didn't intend to take because you shouldn't have been in that trade anyway. So I don't like to jump in. Obviously, I never jump in on a whim or just because the market's moving in a certain direction, and you shouldn't either. Okay, but if you're doing a trading checklist, even if you open up the market, if you haven't done your pre-flight check, right, if you haven't checked off all the boxes, then you're not going to get all excited and try to jump into something you shouldn't be in anyway because you haven't taken those steps first, right? So if anything, it kind of throttles you a little bit, right? And if you're planning on trading, let's say at 7 a.m. or 8 a.m. like we're looking at today, if you're planning on trading 8 a.m. Mountain Standard Time today or any day, then you're going to do your checklist before that time, right? So you're 10 minutes before or whatever it may be, however long it might take you to do it, then that's what time you're going to want to, start doing that. That way, when the time comes that you're ready to enter the market, whatever times you've tested for, you're ready to go. Your checklist is done. You know what your lot size should be, so on and so forth. Okay, so here's the suggested checklist items. Uninterrupted trading time. Okay, so a specific time within the day that you're always available to trade, preferably a time where nothing follows your trading time for at least 1 hour. So if your trading time is 8 o'clock, 8 a.m., then and you're going to trade until 10 a.m., then make sure that you don't have anything going on at 10 a.m. Okay, if you're going to trade until, from the 8 a.m. hour, so 8 to 8:59 and then 9 to 9:59, right, that at 10 o'clock you don't have anything going on. You don't have to be leaving for work to be to work at 10 o'clock. You don't have to go pick up kids. You don't got anything going on at 10 o'clock, right, where you may perhaps have to abruptly leave, right, or end up having to leave early. So, give yourself at least an hour after that, primarily because you can get really distracted with other things, especially driving, by the way, if you're still in a trade. So you're driving to do something because it's 10 o'clock, you're done trading, but you're still in the trade. And now you're driving, you're doing other things, and you're still in that trade. You may be tempted to open up your phone and take a look at it as you're driving or whatever. So just to make sure that you don't have that anxiety leading up to 10 a.m., right, that you have these things to do or whatever, and so that if you are in the trade beyond that, you have some time that you can, make sure that things go well, right? If it's, and an hour is a lot, I realize that, but I want to just I want to just make the point that psychologically, if you have something at 10 o'clock or you're going to be going on to doing something else that's pressing at the end of your trading, or immediately at the end of your trading, then leading up to that time, that anxiety can spill into the time that you've allocated for trading, right? And make sure this time is not time that you're using to, do other things. You're not surfing Facebook. You're not, watching YouTube videos. You're not playing some game on your phone. You're not answering questions for other people. You're not in transit. You're doing nothing but staring at the screen and watching it, right? Obviously, if you're in between trades or what have you, I don't always recommend staring at the screen. But for this setup, for example, where it's a 5-minute setup, you've got to just watch the screen constantly, right? Because if you pull away from it, even for a moment, 5 minutes can fly by and you won't even realize it. So you want to make sure that you're always staring at the screen, you're always ready to enter a trade. Keeping an eye on your trade is irrelevant, because if you have a stop loss and take profit in, it doesn't matter if you watch it or not, it's going to do what it's going to do, right? So try not to get over obsessed over those things. But if a new 5-minute candle comes out, you want to make sure that, was my trade set up on that previous? Am I supposed to enter a trade? Whatever it may be, right? Okay. So make sure that whatever uninterrupted time you have is allocated specifically for trading and nothing else. Check your data feed. Now, for us, we have Green Chart. And we want to make sure in Green Chart, where our indicators are encrypted, that our data feed is active and we can actually see the market moving. Obviously, the market's not going to be moving right now because it's after hours. The market doesn't open again until Sunday at 5 o'clock Eastern. But we want to see that the market's moving, right? There's some movement in here. So we know that we're connected and we're getting a live indication, that our indication is not paused because our internet is cut out or something else, right? We don't have any banners or anything that's saying that historical data is downloading or anything. We know that it's connected. And then in addition to that, any platform that you're using, so if it's MetaTrader 4, if it's some other broker or something else, that feed is working. And when you're ready to push the button, that it's going to accept that trade and put you into the market, right? So be sure that your trading platform, any other programs needed for trading, are connected and functioning correctly. So whatever that might be, right? Your indicators are functioning correctly, or whatever you're using to trade on are live and functioning correctly. And that's something you're obviously going to check every time you're going to get ready to press the button as well, right? You've got 10 seconds before you're going to press the buy or sell button. You want to make sure those things are functioning, right? Economic calendar. You want to make sure to check the economic calendar. And the reason why we do that, so be sure to check to ensure that there are no trades that could, they're not trades. I put there are no trades, but that should say there are no announcements that could affect your trade analysis. Remember, we do not trade during announcements. So this should say announcements. Sorry about that. Okay, so there's no announcements that could affect your trade analysis. Okay, because it doesn't matter what your trade analysis is. If an announcement comes out, that can go any direction it wants, right? Whatever direction the majors decide to push it. And we know, based on, we've discussed this in the past, the big institutions hide some of their biggest moves around announcements, because they know if everyone knows the general consensus is this announcement is coming out and it's going to move the market a certain way and everyone's going to try to trade that way, then the banks, the big institutions, can just do the opposite, right? Because it's a zero-sum market. So if you're pushing short, they can push long. If you're pushing long, they can push short. That means you lose, right? Sometimes that's how it happens. Sometimes it doesn't. Because of that, there's no way of telling which it's going to be. So you just stay out of it. You don't trade them. And if that's part of your trading strategy right now, I can almost guarantee 90+% that you're not successful at trading. And if you are, you haven't been successful. If you are successful at it, you haven't had enough time at it, a month or two, that you've been successful. Maybe you just started and you've had, a good couple weeks and you're trading announcements. But it's not going to last. It's not. So I definitely, recommend that you check an economic calendar like forexfactory.com. Make sure that if there are any announcements that you stay away from them. I would say at least you know, an hour before an announcement, 30 minutes after an announcement, or 30 minutes in either direction. You know, you guys can decide, but a lot of times the market will posture before an announcement, and then obviously you're going to have the, you know, those swing traders or the institutions making their moves initially in that first 30 minutes or what have you. A lot of times the first, you know, 5 minutes, but give it some time to normalize, and then you can, you know, get back to placing your trades. Review your trade plan. So make sure you're ready to execute a trade when the opportunity arises. Right? What setup are you anticipating? Setting your lot size based on risk percentage and any necessary technical analysis is complete. Okay, technical is like indicator analysis as well, right? So our trade plan was we were going to wait for, you know, our parameters, right? So here we are at 13:55. We're going through our checklist. We're ready to go. We know what our trade plan is, right? And we know we go into our platform that we're trading on. We make sure we set our lot size in advance, because at this point you haven't placed any trades, so it's easy to figure out what that 1% or 2% is of your account that you're risking, right? You set that lot size based on your stop loss. Okay, so if your stop loss, if you're risking, you know, you've got a, you know, let's just say a $10,000 account, and you're risking 2%, right? Holy cow. You're risking 2% of 10K, which would be 200 bucks. And you know your stop loss is going to be 6 pips. So what equals $200 in 6 pips? Right, so it's easy to just pull out a calculator and say, okay, what's 200 divided by 6, right? Divided by 6. So 33.33. So $33.33 per pip 6 times is 200 bucks, or actually it's like 180 something, right? So that's a lot size of 3.33, right? So 3.33, actually, and again, we could probably do more than that, but 3.33 times 6 is 199.98. Yes, that's close enough, right? So right there, 3.33 would be our lot size if we had a $10,000 account risking 2% on that first trade, right? Then your account would, if you won that trade, your account would increase by $100. So if that's enough that you could increase your lot size, then you want to know, okay, what's 2% of $10,100, right? And then what that number is, and then divide that by 6, and then you've got your lot size, right? And there's ways that we, you know, we have calculators and things that you can use when you're a member that help with that, so you're not having to do that hard math all the time. But, you know, you want to be prepared for that beforehand. Okay. And then journal. So record your daily progress. Price of entry. What, you know, each of your trade, what price did you enter at? What your stop loss price was, what your take profit price was, and of course whether the trade won or lost. Additionally, I find it very useful to write about my thoughts and process, my thought process and mood, right? If I was in a bad mood, if you know, I felt rushed or anxious or whatever, what I was looking at when I analyzed. So at first it was just a sentence, right? Trading went well, you know, won all my trades, lost one, whatever. And other days it was like, you know, I was feeling emotional about this, I was arguing with the kids, or I had a headache, or whatever it was, right? It became like a paragraph. But it doesn't take extra time. Or I would write in, you know, I've noticed that if certain indications look a certain way, they don't work out as effectively, right? Or they work out even more effectively than I thought. And so then I can go back and review those later, and I can get some of those tidbits of information to be able to utilize in the future as well, right? But if I'm not documenting it, then I don't really know what my mindset was at that time, and I don't know how to improve not only my mindset, but maybe even my setup as well. So let's look at a trading checklist. So this is a general trading checklist, right? And then you just make a mark here, right? Do I have uninterrupted trading time today? Yes. Is my data feed connected, right? I've checked my data feed. Yes, it's connected. Have I looked at the economic calendar? Yes, there's nothing that's going to get in the way of me placing my trade, so I'm good. or even if there is, yes, I checked it, right? Okay, for the setup that we learned today, what's my stop loss, right? 6 pips. And what's my take profit? 3 pips. And what's the win percentage I'm expecting? We'll just say 80%, right? And so based on that, what's the risk percentage? So based on a 2-to-1, 80%, we know that we can go probably as high as even 3%. Actually, right here we use much more conservative numbers. We just said 1%. But we know we can use up to 3%. But because we could be in these trades, into multiple of these trades at the same time like we were today, then we're just going to say 2% risk, right? And what would our lot size be? Well, of course, that's going to for our first trade, right? So that would be based on whatever our account balance is. So our account was 10,000, so it would be 3.33, right? But here I would just put an X, right? Because did I adjust my lot size in my platform, MetaTrader 4, right? Did I go in there and adjust the lot size beforehand, right? So let me pull up this demo here. So right here, do I have 3.33? Yep. Okay, it's ready. So when I'm ready to press the seller buy button, I'm good to go, right? Okay, so I did that. Time limit. Do I have a time limit? Well, today, yes, it's going to be 2 hours. And then my percentage goal is I want to do, whatever your percentage goal is. Let's say your percentage goal to increase your account is 2%. You want to try to get to 2% increase for today. And it could be whatever you want, 2%, 3%, 4%. Obviously, it has to match whatever your setup is, because if your setup doesn't generally give you that amount, then setting your percentage goal at that is useless, right? Now, setting your percentage goal based on what your trade normally gives you will tell you, okay, this is my goal and that's what I should be able to hit. And if I want to increase it, then I have to find another setup, increase the amount of times that I'm trading, or whatever it might be, right? Okay, so I've got all these things, okay, and with a 5-minute setup, because you're having to watch it like Johnny on the spot, then you probably can't collect all this information after each trade. But you can collect it after each trade day, right? So the currency pair that you traded on for that day, EUR/USD, and we took, how many trades did you say? 9 trades, I think we said. Let's look at it real quick. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Yep. So 9 trades. So right here, what we're doing, we've done our checklist, right? And right here, now we're waiting. We've done everything on the checklist. And now, we have our lot size set. We know what we're looking for. And there's expert advisors or scripts that we have as well, where if I just push one button, I can have a 3 pip take profit, 6 pip stop loss at 1% or 2% or whatever, and all I have to do is just hit the button, and it does all the math for me, right? It puts me into the trade. It sets my take profit for 3 pips. It sets my stop loss for 6 pips, and it uses money management to account for what is 2% of my account balance in 6 pips, and then it uses that lot size and puts me in the trade. So I literally don't have to do anything but just double click on one of these, and it does all of those things instead of me having to press the buy button, set my take profit, or make sure my lot size is correct, then hit the buy or sell button, and then set my stop loss and take profit. I just hit one of these, and it does it for me, which is the beauty of having a systematic setup, because I know this setup that I've back tested has a stop loss of 6 pips, a take profit of 3 pips, and I can risk 2% on it. So I can pre-program all that stuff in there, and that way when the time comes, I can just hit the button for any currency pair that I'm trading it on, and it'll use those parameters. So then I don't have to do any of that math, right? So I'm ready to go. I got my finger on the trigger. Now all I'm doing is watching, right? No, right here, this starts to set up. As it starts to count down, I'm ready with my finger on the trigger, right? So I've got this ready to go. And I've covered all my bases, right? I know that everything on this checklist is done. I'm confident. My mental fortitude, my psychology here is solid. I'm not guessing at anything. I don't feel uncertain about anything because I've looked at my setup a ton of times because I've back tested it. I know when it's a yes, I know when it's a no, and I know if it's a maybe, then it's a no. I know when it's time to pull the trigger, I am confident that I am ready because I've done all the steps necessary to get me to that point. I've back tested my setup. I went through my trading checklist, right? I'm ready to take off. I'm ready to fly this plane, right? So again, everything that we do goes back to psychology, and everything that we do in psychology goes back to having a method and a plan and so on, right? Because all these things are symbiont. They all work for or against each other. If I don't have a plan and I haven't done a trading checklist or one or the other, then when it's time to pull the trigger, I could second guess myself. I could say, well, I've lost 2 of these trades in a row yesterday, or I just lost 2 of these trades in a row. Should I take this? Right? I'm scared now. I'm fearful. Yes, I should take it. All my parameters are there. I should absolutely take it. This is the time that I'm supposed to take this trade. And I know that I've got all my I's dotted and all my T's crossed, and I'm ready to go. Let's punch the clock. Let's do this. Right? And believe me, you're going to be in those situations. You might have 2, 3 back-to-back losers, right? And you need to know that's when it's most important to pull that trigger and place that trade. Okay, so I've got everything done. I don't have to second-guess myself. I worked through my trading checklist. I've already back-tested even prior to this for, took me 10 hours, let's say, 15, 20 hours, whatever it took me, and I know what my parameters are. I know what I'm looking for. I know what my risk percentage is. I'm good to go. I see my setup. I press the button. Right here. Boom. I'm in for a 3-pip take profit, 6-pip stop loss, and I'm using 2% of my account. For this account, it'd be like a 1.44 trade or something like that, right? Which would be $14.40. So let's look at that. So 86, let's just use 86 times 2. So it'd be about $172 would be the risk, right? And divide that by 6. And that's $28.66. Is that right? Yes, that's right. Sorry. So it's not 144 would be 1%. So it would be like 2.86. That would be my lot size. Right? Now, of course, because I just push this button, it does it automatically. I don't have to do anything here. But if you did, that's what, then we could figure it out, okay, 2.86, and I'm ready to press the buy button, right? Because that's part of my trading checklist. Now, if I have this button, then I don't have to really type anything right there because I have the button that's going to do it for me. This is 1% risk, but if it was 2% risk, then I would use a different button. I would use something in here, right, under 2% risk. Okay. And then I push the button. And I'm good to go. I've got all my I's dotted, all my T's crossed. Okay? And when I'm done for the day, I can go back over those trades. Right? So I've got 1, 2, 3, 4, 5, 6, 7, 8, 9. I took 9 of those trades. It's all the same day. And I mean, you could have one for each month. You could have one for each day, whatever you like. I prefer to have one each month, and then I can just keep on going down this way. So the date today, 5/7/21, and then trade direction, the first one was long, and my entry was 121.285, 1.21285. My stop loss, if you're using a hedge, obviously you can put what your hedge is, your price average. We're just using stop loss take profit. So 1.21285 take profit would be 1.21315, 1.21315, my stop loss, not my take profit. 121.285, 121.225. 225, that's the stop loss. No price average. So NA, and then my goal would have been 3 pips, right? Or you can even put in the price. And then you can journal for that or for the day, right? So if you can journal each individually. You say, I noticed this happened on this trade. The indicators looked a certain way, or my setup, when it looks this certain way, like it looked on this trade, it has X result, right? Or simply 1, right? And if you lost it, obviously, then the note would say lost, right? And then after you're done, you could even highlight the day, right? The whole day, so you know this is my journal entry for that day, right? Highlight all those a different color, whatever it might be. That's one day, and then the next day, however many trades you take, you just alternate and highlight it a different color. And the next day would be yellow again, whatever it might be, right? Where if you're only taking 1 trade a day or 2 trades a day, then something like this might not even be necessary. And then you go to the next one and document that one. You could even put in here how long it took to fill, right? How long in your journal entry. 1 took 30 seconds, took first 5-minute candle, whatever, right? But really, the journal should be something that evolves, and you end up realizing what things are most important when you're journaling, and start journaling those things. Okay? But again, a lot of this goes back to the psychological facets. For one, the first thing that we talked about, not being too anxious and getting into the market and rushing into something that is to your detriment, right? And 2 would be so that you make sure that when you're ready to pull the trigger, you are confident. All I's are dotted, all T's are crossed. There's no question as to whether or not there's irregularities. You're ready to push the button. You say to yourself, oh, wait, is there an announcement right now? What if I put this trade in and there's an announcement right now? Nope, you already checked that, right? Wait, what's my lot size? Okay, I'm ready to place the trade, but I didn't set my lot size. Shoot, what is my lot size supposed to be? Forget it. I'm just going to put it in at whatever it is, right? And maybe you put it in and it's lower than it's supposed to be or higher than it's supposed to be, right? You can really mess yourself up, your sequence of trades by doing that. You want to make sure it's at the correct lot size, right? You want to make sure that your data feed's connected. Believe me, it's a mistake it will only happen to you once. For example, I know that I'm looking at historical information right now because, for one, this is red. And when that's red, for me, that means that I'm looking at historical information because I'm looking at something that's not recent. If I move forward, well, now that's green because this is the live candle. Now, because the market is closed, or if my internet cut out, or if my computer was freezing, that could very well still be green, right? And the time could be correct. But if it's not moving, how do I know my computer isn't frozen? Right? So I want to actually see it moving. I want to see the countdown moving or something move so that I know this is live. And if it's not, what if, for whatever reason, I wasn't paying attention and I was actually looking at, if we're here on this setup that we're looking at, holy cow. Right here, I went way back. Holy cow. Sorry, guys, I'll get it together here. Okay, so here I am waiting for my setup, right? And it's there, but I'm actually not looking at that, right? So it's right here, right now, but where the market actually is over here, right? But I'm looking at historical information. And I'm not looking to see if the market's moving right there, if the countdown's moving. I'm not making sure my data feed's connected. I'm just looking and say, oh, my setup's there. Okay, I'm going to place the trade, right? But I don't actually know if I'm looking at live information, if everything is connected, right? But if I take that step, checking my data feed, then I know what I'm looking at is the most up-to-date and information that I'm going to be using to place my trade, okay? I want to know what my stop loss is beforehand. I want to know my take profit is beforehand because once I place that trade, I want to be able to put that information in. And again, stuff like this, stop loss, take profit, risk percentage, those are things that, with for our subscribers, for our members, we have tools for, like I was saying, just that quick entry script. That just does the math for you. It sets the parameters for you, so you don't have to worry about that. Nonetheless, you want to make sure that you've got that information in there, right? What is my stop loss for this setup today? What is my take profit for this setup today, right? And that way you know which script you're using, because if you're using multiple setups, let's say today's setup, that's this setup that I was just running. But if I'm using a different setup at a different time of day or something else throughout my trading day, then I know, okay, I need to make adjustments to those. What am I starting with? Right? What I'm starting with is that 6 pip stop loss, 3 pip take profit. I win it 80% of the time. I'm using a 2% risk. Is my lot size set? Yes. All right, what's my time limit? 2 hours. Okay, so I know when the time comes to be done, I'm not going to be excited and all giddy and uppity, feeling like the market's going well. I've had a bunch of winners. I could even sacrifice to have a loser or two because I've done so well in the market today. So I'm just going to continue to trade. Nope, this is my time limit. That's what I'm going to stick to. So then it becomes part of our trade plan, right? Because if I didn't and I broke that rule, what if the next trade lost because I didn't backtest it, or the next couple trades lost because I didn't backtest them? Even if they would have won, right? I'm still setting a bad habit for myself, especially if they won, right? Because I broke a rule now, and now I feel like it might work because I won those trades, right? So I don't want to do anything that's going to deviate from my trade plan. And it's easy to have. It's easier to have discipline to your trade plan and your process if you have a trade plan and a process, right? And you stick to it religiously. Otherwise, once you break one of the rules, it's just a short few steps before the rest of the rules follow. And then you look back a month, 2, 3, 6 months down the road, and you're like, this doesn't work. And if you journaled honestly, then you would see, oh, actually, this is where I deviated. Well, what would have happened if I would have stuck with my plan? And you could literally go back and test that. Well, how would I be right now? How much further or behind would I be right now if I just stuck to my plan? Right? This is where I deviated. This is where I started changing things and calling audibles and not testing parameters to see if I should, if they're valid, right? And then everything goes out the window. So again, you want to document these types of things. You want to make sure that they're part of your trade checklist to remind you that they're there for a reason, right? Your percentage goal for the day, obviously that's going to be fluid because at some point, you want to make sure that whatever you've back tested for and whatever you're trading, you'll have a good idea of how often it happens in the day, what the win-loss is, and that'll help you set your percentage goal. But it'll be based on something mathematic and scientific and not just, a hope. Now, in terms of determining what it is, if you want to earn 2%, then and you back test something and you know that it's not going to earn you 2% a day at its best, then that means that you have to test something else as well, right? Maybe the same setup on a different currency pair at the same time, or a different setup on the same currency pair. Whatever it might be, you need to add to your repertoire in order to have more at-bats so that you can get to your risk percentage goal. So setting what that will be for you, what you want it to be based on, how soon before I want to supplement my income, replace my income, build wealth. How soon do I want to hit these goals? Do I want to supplement my income in the first 6 months? Okay, then I need to find enough setups and backtest enough setups that'll give me what I need in order to achieve that, right? And the metrics that I like to use is 200 trade days a year and 5 trade days a week, so 20 trade days a month about, right? And so if you get about 2 of these setups a day, and let's just use very simple numbers. Let's say that it's a 1-to-1 risk to reward, and you're risking 2%. And you get 2 trades a day. So one of them's a winner for 1% growth. Let's use something better, actually. We can't use a 1-to-1 at 50%. That would not be profitable. Let's say 1-to-1 at 70%. So you know that one of them is going to be, if you took, 10 trades that day, 7 of them are going to win, 3 of them are going to lose. And out of those 7, you're going to have, the increase for 1% risk and 1% growth. If it's a 2-to-1 like we're looking at today, then every time I lose a trade, it's worth 2%. Every time I win a trade, it's worth 1%. Right? So if I know I'm going to win 8 out of 10 trades and I take 2 trades a day, well, then in 10 trades, which is 5 days, I'm going to be up 8 trades and down 2 trades, which would be up, if I took it straight across, 8%. and down 4%, right? Which would be up 4%. Is that enough to get 2% a day? No, because that would equal less than 1% a day if you took the overall 4% net growth and spread it across 5 days, right? And hopefully I'm not confusing you, because in my own brain I'm like, you know what, none of that is very clear. But just know that there is a process, so that if you say, this is where I want to be in this much time, and this is my starting account balance, there is a way to break that down scientifically and mathematically based on the setups that you have and what you need in order to reasonably achieve that goal. Okay, so that's the short of the long. All right, guys. So again, I hope I put enough emphasis and showed you there's real value in having a trading checklist, and how that ties in with the psychology of day trading, making sure that you are successful at day trading because all the I's dotted, all the T's are crossed, you didn't miss a step, and you're ready to go when the time comes to push that button. And again, if you guys have questions beyond that, reach out to us. We're more than happy to help you out with that. The other thing is, again, I want to invite you guys to take advantage of our 30-day trial. Right now, it's at no cost. It's free, and you're going to get at the very least, 2 sessions with a one-on-one professional day trader. And that's them teaching you stuff, right? Showing you setups and helping you look at things. You can learn this setup that we reviewed today and practice it and trade it in a demo account live during that 30-day trial, right? Along with other setups. You can trade them yourself. You can try them out yourself to see, is this something that's good for me? Can I make this work, right? Is it valuable? Does it meet a personal need? Can I do it? Right? Those things you'll be able to answer really quickly within a week of trying it out. But I want to invite you guys to try it. To do that, you can email us directly, info@daytradesmart.com, or just go to our site, daytradesmart.com. Fill out a form to get your free alerts, and someone will contact you to set you up with our trial program at no cost, absolutely free for 30 days. Again, thank you guys for joining us. We'll look forward to talking with you guys next week for the sweep. Have a good one, and happy